What's up everyone? Welcome back to another video and thank you for being here. Another successful prediction that we made last week for our weekly analysis video, and if you did not see it, you can go back and check it. We predicted that we were going to drop down for these lows right here, or sell side liquidities, and I'm currently on the weekly time frame, and as you can see, we're dropping very hot, as I told you in the last video. So here are my three parts or three sections in my weekly analysis video. First, I'm going to review and tell you if our prediction for last week's price action was correct or not. Second, I'm going to review all the trade setups that showed up based on my market direction. And lastly, I'm going to give you analysis for the next week prediction, or where I should be expecting the market to go for next week that we're gonna start. So without further ado, was my prediction or analysis correct for last week? And the answer, as I told you, absolutely yes. We got it. We got it correct, and we have been getting it correct ever since I started this mini series of market prediction or market analysis or weekly market analysis. We have been getting it correct every single time, so I'm really proud of myself for um, doing a really good market analysis for you guys. So it's helping you and it's helping me at the same time, getting it correct, of course. So I'm going to review based on this market direction that I told you in the previous video for market analysis. If we would go back to starting of last Monday and review all the trade setups that present themselves based on our market prediction or market direction, did we get every single trade correct, or did we win every single day? So starting here on Monday. So Monday market open 9:30. We'll go up on 10 a.m. New York time, and then we see here a beautiful trade setup with this fair value gap that got inverted, and your trade would be here, stop loss on this high, and your target will be the 50% of this bullish leg, would be right here. It is a little smaller, so you can actually put your stop loss here, and I'll give you one-to-one anyway. I'm not trying to like sugarcoat how you should be trading or anything like that. I'm just trying to see if the market presents trade setups for every single day based on our market analysis that we did in the previous video. So Monday, it would be a win because we did have a short setup and it did work. It did not stop you out. And here comes Tuesday. Tuesday kept going up, and we'll see here 10 a.m. because I usually like to trade at around 10 a.m. So here the market open, we trigger up or we pump up, do some manipulation, and then the market dumps down, and then it goes to pump it back up again. And the first trade setup that presents itself is this IFG right here, inverting those fair value gaps, and we kind of pull back down a little bit, but then we pump back up again. And the market didn't really present a trade setup until lunchtime, when we took all this buy side liquidity, and then we dumped down, and we kept the dumping down going into New York PM session. So if you did not take a trade during the 10 a.m. here after the manipulation, and here was a really good trade setup, fair value gap that got inversed. It was also during the macro timing as well, and the price here came to it, back to it, to retrace or retest that IFG, and then you would be looking to trade lower and taking out this sell side liquidity. Stop loss would be above this high, and you can get yourself 3.29 RR because it was during the macro timing. But if you did not take that trade, you would be looking for trading this setup, which would be a break-even trade after taking this sell side liquidity, and then trying to catch anything in the PM session. I usually do not trade and do not like to trade PM session, so I am not going to point out any setups here because I do not like PM session and I don't know the characteristics of a PM session. And coming to Wednesday, so Wednesday the market open and we pump up, and then the first trade we get is this fair value gap that got inversed. And I want to say something, guys. All of this week price action has been really, really, really stupid and bad. And don't feel sorry if you lost a account this week or anything like that, because the price was really, really bad. Market moved really horribly, and the volatility of the market was so bad. Like this trade setup, stop loss $63. That's super bad. So Wednesday was horrible. It was moving against our market direction. We kept going up, and all the short setups that we got were not really that good until same thing again, lunchtime going to PM session, and then Mr. Trump comes out and start talking about tariff stuff. We just start dumping down after market closes at 4 p.m. and just straight up dumps like 900 points. This is the craziest market ever that we're living in right now. It shows you that it's really important to understand the higher time frame market direction, because on the lower time frame it can deceive you pretty easily, but you have to understand the market. Coming here on Thursday, the market starts right here, 9:30. We pump up, and then there is a fair value gap here that got inversed, and then we come here, another pump up, and we get another inversion of a fair value gap during the macro time again. And you can take this trade to this low right here, 2.1 R, or you can have taken this trade right here. After this sweep, reaction from the fair value gap right here, right? And you can take this inversion fair value gap, and you take the trade, stop loss above here, and you take the trade to this low again, previous day low right here, there, 1.16 RR, or you could have caught it from the very top, which will give you 2.3. Lastly, Friday right here, the only the only trade that I like is this fair value gap that got inverted. That's pretty much it. At 10:05, you get this confirmation, and you take this trade, stop loss above here. Look at the stop loss, $100 stop loss. This is crazy, man. And you target pretty much 730 low, which was, I think it was news or something like that, which will give you 2.79, almost 280 bucks of take profit or points. It's crazy. The volatility on this week's price action or last week's price action was absolutely horrible, and do not feel bad if you got something wrong or anything like that. And the market volatility was horrible. That's why a lot of people prefer to trade swing trading on a higher time frame, because there's a lot of stuff that goes on a smaller time frame, and it doesn't really make sense. And even if you're right or wrong, you might get stopped out either way. But on a higher time frame, the more higher time frame you go, the more likely you get it right, because it's a higher time frame analysis, and this is the market direction. Where should the market be going on a higher time frame prediction? So lastly here, we're going to talk about the analysis for next week. What am I expecting for next week's price action? Where do I think the price should be hitting? So first of all, before I do that, I want to look at the S&P 500. I want to see, where did we reach? So we did reach this low right here, which we made on August the 5th. This is the August 5th. We did not take this low on NASDAQ, but we did on the S&P, which is not really that big of a deal when we're going lower. We shouldn't be expecting like SMT or anything like that. But here's what I'm going to give you. I want to take you back to during 2020, 2020, and 2021. When we ran up bull run, we came back down to 0.5 area. We gave a fake pump, and then we swept it, went back up again. So here's what I'm thinking and what I'm predicting. I'm going to do the exact same thing for this bull run for 2022 until 2025 here. This is the bit, and I'm going to remove this for you. So this is our bull run. And during that bull run, we never seen any pullback down to the 0.5. And you can call it whatever you want. You can call it that Trump is making it a little bit cheaper for the rich people to get in again and whatever. But the reality of the market and the chart is we were due for a pullback down to retrace to the 0.5. So however you put it, this is the market direction that it's currently doing, no matter what news is going on in the world. And if you go to the monthly chart, this is how big institutions trade. And you can look on the monthly, you can look in the weekly. I'm gonna go ahead and move those because I don't want to confuse you guys. You go back and look at how the market retraced. We retraced, like, we took forever to retrace to the 0.5. We took from December 21 until October, or you can call it December 22. So pretty much a full year to retrace to the 0.5. Because of Trump, things are moving a little bit fast because a lot of news and all of that stuff. So we're moving pretty fast here. And I'm thinking that we are going to take on this sell side liquidity and this sell side liquidity as well. And mark my word for it, we're going down. Although we currently have an SMT because S&P took this low and Nasdaq did not. But this is my prediction. Everyone is entitled to their own decision and thoughts and whatever. I am thinking that the price will go down to this sell side liquidity and then this sell side liquidity. And from there, we will get a pump up, whether it's a fake pump up or just a pump up, and then we'll come back down to sweep it and then we see the real direction. We don't know. But all I know is near future prediction, we're going for this sell side liquidity and this sell side liquidity. So the price will go down to $60,000 again. We never seen the Nasdaq in $16,000 since what, end of 23. I think the price will come back down here. And also, guys, for the people that love support and resistance and all of that, when we came back up here on this, like here, this is another kind of another perspective to look to or at. When we were here, down here, we came up here to take on this high, right? And we took that high when we never came back down to retest that wick. A lot of people like to trade retest of wicks or retest of support levels or whatever or anything like that. So any way you look at it, this zone right here, you can call it an order block, you can call it a support zone, you can call it a retest of a wick, you can call it whatever you want, but it all makes sense. It all aligns up to the same exact idea of the price coming down to reach the 0.5, taking out these sell side liquidity, retest of this high, and retest of these bullish fair value gaps, and then going maybe up again a little bit. So let me just draw it because I like to draw stuff for you guys. This is what I'm expecting the price to do. And that's pretty much it, guys. Don't forget to drop a like on the video, subscribe to the channel if you're not already yet. Let me know what do you think down in the comments below and we can talk about it, right? And lastly, guys, make sure to share this video with your friends that you think they will benefit from this video. Thank you all so much for watching. I will see you in the next video.